Welcome to the Hey Docs podcast with your host, Jill Allen. Today I have Steve Steinbrunner from Provide joining me back on the show. In this episode, we are covering all things loans, from what you need to do before you start the loan process, to the details when it comes to getting approved, and even the nuance of land and property loans. No matter where you are in your practice journey, there is something for you in this episode. Let's dive in. Hey docs, when it comes to marketing, I keep hearing that you're frustrated and that you don't know what you're paying for or even if your marketing efforts are working. Are you wondering what your next marketing move should be? I would suggest you contact Mary Kay Miller and her team at Kaleidoscope. With their free digital marketing audit, you will get answers and solutions to your biggest marketing questions. Go to contactkl.com to request your free digital marketing audit today. When it comes to websites, SEO, and digital advertising, you don't know what you don't know till you know. Find out what you don't know today. That's contactkl.com. All right, Steve, I am so excited to have you on the show again today. Thanks for joining us again.
Oh, you're welcome, Jill. I appreciate you having me. It's good to see you again.
Yes.
Always a pleasure to be here.
Always great to have you. And I have to tell you, I've been looking forward to doing this episode with you because it is really amazing from the last time you were on the show until now, just the changes that we have seen in the industry. And I hear a lot of things, and we'll get into it in a little bit farther on here. But there's a lot of things that I hear from my docs, especially in the Facebook groups. And what do you mean a loan costs this much? And I can't wait to just unpack it all today. So as we get going, the way you remember, I like to start this off is if in the event that somebody doesn't know who you are, hasn't listened to our previous podcast, would you mind just talking a little bit about yourself, your role at Provide, and what Provide is doing in helping in the lending side of our industry?
Sure, absolutely. And thanks again, Jill, for having me.
Yeah.
Personally, I'm from the Midwest, and I've been in the dental industry, the healthcare industry for almost 30 years. And really started off selling dental supplies in small towns in southern Indiana and have had a variety of roles and responsibilities in the dental industry since then. Currently, I'm a director of practice finance for Provide, and I'm based out of Denver, Colorado is where I'm talking to you from today. My home sweet home.
Mine too.
And Provide, for people who may not have heard of Provide, is one of the leading lenders in the private practice healthcare industry. We lend money to private practices for physicians, dentists, veterinarians, commercial real estate, practice lending when you want to purchase or start up or add additional locations. We are also a subsidiary of a very well-known 100-plus-year-old bank, Fifth Third Bank, based out of Cincinnati, Ohio. So we're essentially a healthcare division for a very established kind of brick and mortar bank.
Perfect. Yeah, that's great. That's great. And it's been really fun to really see Provide come in and take ownership of the lending space. And I know I've got many doctors that are listening that have used you, and it's just such an easy process. So I really appreciate what you guys are doing in this space and making it easy for docs to get a loan. You think of lending as being one of the more stressful things when you think about doing a startup. And I really appreciate that you guys have simplified that process for sure for us.
You hit it right on the head. Simplify the process was exactly what the goal was for our founders. And the story is super. Two high school friends from Minnesota in an apartment in San Francisco. You've heard me tell the story.
Yep.
We're actually doing a software startup and realized that for a private healthcare practice, it's not easy to get a loan. It's a cumbersome process. And so they recognized an opportunity to really help the industry make that process a lot more efficient. And the success is where we are now today.
Yeah, for sure. For sure. I know today we're going to focus a lot on kind of that startup practice per se. And I want to talk about the beginning stages of buying a practice because I know I've got a lot of docs that listen to Hey Docs because they are thinking about getting into whether it's going to be a startup or an acquisition. They know that their goal is to move away from being an associate and into some type of practice ownership. And what I am hoping we can do today is really just talk about the temperature of where things are at and what docs need to be focusing on now, 2024, and as much as we can talk about the future in front of us. We may lean back a little bit on where things were to where they're at now, but I'm wondering if we can just start off by talking a little bit about, I don't know, maybe our top 3 or 4 things that you think that docs really need to be thinking about when they are preparing to take out a practice loan. And let's start just with doing a startup practice versus maybe talking about they're getting ready to do an acquisition.
Okay, sure. And I'll share some ideas, and some of them may be specific to Provide.
Mm-hmm.
And so I'll say that understand banks are different.
Yep.
And so if I share something that is a requirement or a suggestion from our underwriting or our guidelines, it may be different for another bank down the street. So I would encourage everybody to ask those same questions of everyone,
Yes.
because they're not all the same. But great question. How do I prepare in advance? And I get that call a lot for
Mm-hmm.
folks that might say, I don't want to get a loan now, but I'm in school and I'm going to be getting out in the future and I want to start preparing now. And I'd love to get those calls because the more you can do in advance, the easier my process is.
Mm-hmm.
Some examples of that would be credit score. That is the easiest way to measure the responsibility of all of us financially. And it's important to banks as well. And so I would say a target minimum credit score is 680. That's what I'd like to see people have before they apply for the loan. And if you are lower than that, let's investigate that.
Mm-hmm.
And a lot of people don't realize you can look into what is causing that. You can get a free annual credit report, which I encourage everybody to do, and make sure that credit score is healthy well in advance. Another one is cash. We call that liquidity in the banking industry.
Mm-hmm.
And liquidity is defined, Joe, by cash on hand that could be in, if it's an existing doctor, in the business or in a personal account at home that is not tied in any way to retirement accounts. So liquidity doesn't recognize 401ks and independent IRAs and what have you. And liquidity is important, I think maybe even post 2008 when the country was going through some financial challenges. Banks began to really demand that borrowers have a little bit of cash. And if you think about it from a common sense point of view, makes sense, right? If we're going to loan money to somebody for a business venture, we'd like to be also assured that they have a little bit of money on their own to fall back on.
Yes.
And that certainly doesn't mean that's cash that they're going to require for a down payment. I don't want to confuse people. Liquidity is cash that we want to see in your bank accounts that you have saved that will illustrate that responsibility. Other things are tips, rather, would be careful with personal expenditures prior to buying a practice, because practice underwriting combines projections we have on the business that we understand very well, a new orthodontic startup, for example, but it also blends that with what kind of money is required to go home for this doctor to live on and to pay their mortgage, right? And to pay their bills. And so we do that math. That is what the loan underwriting is partially responsible for. And so I always caution people that if you have a dream for that monster mansion, can you put it off for a little while? Or maybe not buy the sports car or the second home or what have you. And I don't want to tell people how to live, but I can guide people on how to make sure that math
Mm-hmm.
works before you buy a practice. And so those would be some examples of just a few things I would encourage people to begin to get ready for prior to applying.
Yeah, that's such good information. And I feel those are the things that when I'm talking to doctors as well, some of those components are the things that I have seen over and over with not only Provide but other banks. Those are just our basic tenets of the things
Right.
that we need to pay attention to. And I'm curious, and I think this goes with the credit score component, but I've heard you say this before, but that revolving debt with doctors who have revolving debt, is that something that they should also still be paying a lot of attention to as well?
Great question. So revolving debt could be an example of a credit card, right?
Mm-hmm.
That you have a balance on that you maybe you make minimum payments on, but it's there. The easiest way to tell you, Jill, is they're going to subtract any revolving debt directly from your liquidity. So whether you pay those off in advance and it lowers your cash on hand, be careful, because we
Mm-hmm.
still want to see a minimum amount of cash on hand, right?
Yep.
And so absolutely, it's going to be a net number. And I don't think I shared that number with you, but since you talked about an orthodontic startup, $30,000 to $40,000 liquidity, cash on hand. We could also count securities. We talk about stock. If people are investing and have securities that are not in any way related to a retirement plan, we can count those.
Oh, great.
A lot of young borrowers have Bitcoin
Mm-hmm.
these
Mm-hmm.
days. And a lot of banks now are becoming more comfortable in recognizing, in some cases, a percentage of that.
Oh, interesting.
Mm-hmm.
Oh, that's
And
great.
starting to get more comfortable. A lot of the young borrowers, it's very common, Jill, that they
Mm-hmm.
have a little cache of Bitcoin that they'd like to be recognized as being liquid.
Yeah. Yeah.
So, yeah, revolving debt's going to be removed from that liquidity equation.
Yeah.
Yeah,
Yeah.
it's a
I'm
great
gonna I'm
question.
gonna throw a curveball at you before
Mm.
we move on from this, but I get asked this a lot, and I know you're the one who's got the answer for it. Let's talk about cash gifts. And how, let's say I've got a doc and they've got a family member, and I see this a lot, and there are some that are just really lucky to have family members that want to help out in some way. And let's say we've got a family member that says, hey, I've got X amount of dollars that I would like to give you towards your business. Do you mind? I know I'm going to take us on a rabbit hole or rabbit trail here for a minute, but can you talk about that in how that affects liquidity? And should we try and have that gift done before we're reaching out to the bank? And can that affect us if we have it done after we have reached out? Can you talk to that a
Mm-hmm.
little bit?
Great question, Jill. Not a hard and fast rule in terms of when that is executed, right? Because sometimes we'll have people apply for the loan, and that's when we discover liquidity is an issue, and then we can bring that up as an option, and
Mm-hmm.
then they can go and seek that in during the loan application process. So it doesn't have to be secured in advance. We welcome that. We understand sometimes having built that liquidity while you've been in school for your entire life is sometimes difficult for folks, particularly if they're applying directly out of residency, which
Mm-hmm.
is what we allow. And so our underwriting certainly allows people to apply right away without work experience. And so it's a chicken and an egg with how do you expect me to save that money? Gifting money, sometimes with a letter that says you don't have to repay that so that it's clear it's a gift, is certainly acceptable. Yeah.
Great. Great. That's perfect. I just get that question a lot. I've never known quite how, except for to say, hey, you need to talk to your
Mm-hmm.
lender about that and how they view that. But I do think that sometimes that is when my docs are like, gosh, I'm 10,000 away. That's
Mm-hmm.
going to put me another year away from getting going. Sometimes that little bit of infusion of a gift from a family member can make all the difference in when they're able to get started. Thanks for talking about that. So let's talk a little bit about pitfalls and some of the things that you see when docs are coming to you and applying for a loan that could maybe trip them up a little bit.
There's several. One thing we left out in kind of those three or four things you can do to prepare are some of the obvious, like clean license, right? And it's interesting because those three or four things we discussed about what can I do to get ready also happen to be the initial hurdles of our pre-qualification. Those are the
Mm.
first things we address. Because if you fail one of those three or four main hurdles, credit score, cash, clean license, etc., you can't move forward. Other pitfalls, one might surprise you, is frankly lack of vision.
Yeah.
Not tangible, but we'll have folks that come in ready to apply for a loan and really don't understand where they're going.
Mm-hmm.
They don't have a direction. They don't have a mentor. They don't have an idea of what type of practice they want or where they want it to be located. And so it becomes difficult for the underwriters to get behind somebody if they haven't spent the time.
Yeah.
We conventionally, our underwriting doesn't require business plans. Our SBA underwriting does. But in the absence of a business plan, we still have to have a vision. That's
Mm.
one. Tax obligations are another one that don't always seem obvious, but very often with approvals, if there's a tax obligation to the federal government, they're going to want to see that paid off. And so I would say if there are plans, if you have, a tax obligation, let's get that reconciled or at least show that there's a plan in place. Other pitfalls might be maybe not making a distinction between what a dental specific partner could be,
Mm.
whether it's a lender or an advisor or a realtor. I have a lot of people that try and surround themselves with folks that may not have the experience in the industry, and that can create some challenges.
Sure. Sure. Yeah, I can see that. And I know when I'm working with startups, I've got the step by step guide that we work through. And there is something to be said for bringing the right people in at the right times and making sure that we've we're working and aligning ourselves with people who have the doctor's best interest at heart as they are moving through. And I have seen it many times where I will start working with a doctor who done a lot of things on their own before we get started, and sometimes there's just a lot of chaos going on and a lot of different, they're being pulled in a lot of different directions and very stressed out, and maybe they're on this timeline that's ticking down on their approval, but yet they haven't even figured out where they want to be. And so I think that it's important. I love that you said that, because it is important to align yourself with the right people and to make sure that you're moving through the process in the right order. That's the way I look at it, so that it is not out of control, but also that you've got the right guidance at the right time by the right people.
We welcome advisement, and consulting experts like yourself give us comfort because we know that our borrowers are not on an island by themselves. They have a professional that can advise them not only in the clinical aspect of the practice and the mechanisms inside of that, but some of the financial aspects as well. So, yeah, that's important to us that they have some advisement in tow.
Yeah, yeah. So let's talk a little bit about, I think, is the elephant in the room a lot of times with doctors, especially my younger ones that are coming right out of school. And I think it's the student loan component. What is going to happen to loan if I've got student loan debt? Am I going to be able to qualify? How much should I get in there and spend my first 5 years paying off my student loan debt before should I put my dream on hold because I've got X amount of dollars in student loan debt? Can you talk a little bit about that and what that looks like from your perspective on the banking side in regard to that?
Sure. It's a great question. And it's actually one additional pitfall that I didn't address is that comes up a lot where I'll
Mm-hmm.
have a borrower on an initial call with me and they'll tell me how proud they are of having paid off all their student debt. And then I ask a follow up question. How much cash do you have? None. I just told you I paid off my student debt. So it's a little bit of a catch 22. And
It
so my
is.
advice is don't do that. I understand that emotions can sometimes play a factor into that. And when you start to have some income, maybe as a new associate, you want to start paying that down. And I just want to advise you to remember that the liquidity piece is more important. We accommodate the payments that people make in student loans in our underwriting. We recognize it's going to be there. And the cash flow generally can account for that. You're going to
Mm-hmm.
be okay. And so I would say temper that emotion, save your cash, and let's address that after we get the practice up and running. Because I won't name names, but you and I both know somebody on the West Coast that currently holds the record for me with over $1 million in student debt.
Mm-hmm.
And we approved that borrower for a large orthodontic startup loan.
Yep.
So it can work.
Yep.
It can cash flow. Everybody's situation is different, so I don't like to take a broad stroke here, but everybody is underwritten on their own individual merit. But student loan debt's okay. We understand that it's there, and we'll account for it.
Yeah. And I like to say, it's, to me, it's not, that's not revolving debt like we might think about it. Yes, it's debt, but there's a consistency to the payments. There's a cadence to how it's going to be paid out. And I try and encourage my docs when they come to me with this question. Again, I'm always pushing them to talk to their bankers first, but there will be a point in your career where cash is not a problem. And that's probably going to happen about 5 years in, where things are really moving along. You're making good money. And that's the point where you're really working with your financial advisors and saying, okay, strategically, when we're looking at now wealth management and what that looks like for me in the future, what's going to be my plan to get out of debt, to start having extra money to invest in whatever they may be looking at. And I think it's knowing that there is a time and a place for everything, but it doesn't always mean if you're getting ready to do a startup or you're getting ready to purchase a practice that the things that we may intrinsically think, oh, I've got debt, so therefore I need to pay it off and put off my future plans, could actually be the very thing that keeps you from your future plans. Because, if you think about it, if you're able to get in and buy a practice now, 5 years from now, you're not worrying about money if things are, done and set up right.
Mm-hmm.
Where it could take
Mm-hmm.
you 5 years where you're still potentially a slave to an associateship job, and then kicking the can another 5 years to getting that practice open and being at a place where you want to be.
And Jill, this likely won't be their last loan.
No.
Let's remember that we very quickly see folks do a second location, commercial real estate, sell part of their practice to an associate that they brought on, do a ground up project.
Yep.
And we finance all of those opportunities as well. And cash is still king.
Yep.
Liquidity doesn't go away for those loans. As a matter of fact, it may become more important than ever. And so the advice I give that mid-career owner who's owned and operated for 5-6 years and calls me and says, I want to buy a building and move into it, or I want to do a second practice, how much cash they have becomes even more important at that point.
Yep.
And so cash being king does not go away. Keep a healthy amount in the practice, obviously. And post-COVID, I think we're seeing people be more responsible with how much they keep on hand in their practice account, and keep a generous amount just readily what we call liquid.
Yep.
And that's going to enable borrowing power in ways that would be difficult if you didn't have it. So it doesn't go away.
Yeah, I cannot agree with you more there. And again, it's being strategic in what you're doing and what your goals are, for sure. So I want to talk about a hot topic that I am hearing a lot, and that's the size of loans that we're doing today, even to when we last did our podcast a couple years ago, to what I have seen in the last 18 years to where our practices, I can think back to when it was like, oh my gosh, if we're getting a $500,000 loan for a startup, man, we are at the top. Like, that is nuts. So I want to talk about the loans now. And for docs that are listening, this is where I really want you guys to hear me on this, that I love it that you all crowdsource. I love it that you are out there in your Facebook groups and your peer groups, but you have to understand that even somebody who has done a loan and started their practice even 3 years ago, we're in a very different place than now than where we were 3 years ago, 5 years from now. And the thing I want people to hear me say is that it's not that the practice that we're doing is we're just spending money freely and we're just being frivolous with our money. It truly is where our industry is at right now. And so if you're getting the advice, and I know, Steve, you're going to talk to this in a minute, but if you're getting the advice that, oh my gosh, you're horrible in thinking that you're going to do a startup for more than $500,000 or $600,000, docs, I want you to hear me. You're not. This is where we're at. And a lot of this has to do just with our construction costs. So I'm going to let you take it away, but I just had to put that in there because I'm hearing it over and over again, where I feel like a lot of our young docs are really getting beat down by their peers because it has nothing to do with that, like somehow they're doing it wrong, and they're not. It's just where our industry is at, and even the banks recognize it at this point. And you and I both know there was a lot of conversations about we've got to raise these limits. These ceilings are too low for where we're at right now.
Yeah, you make great points. And that $500,000 startup loan sat there for a decade and didn't change, and life changes around it. And what's challenging, Jill, is there's not an easy answer because different parts of the country are very different.
Yeah.
And even within the regions, costs can vary if you're in an urban area versus a rural area. Rural area doesn't necessarily mean it's less expensive. I have a situation where
Yes.
the construction in that particular situation is way higher than it would be in a city. So every project's different, right? But to break it down very simply with math, let's just say an orthodontic startup loan today is probably 800,000.
Mm-hmm.
And if we use 800,000 as a good benchmark for what we're targeting most of these people today,
Yep.
let's break that down further. Of that 800,000, generally, and this may vary bank to bank, $100,000 we'd like to call working capital.
Yep.
And that can be used for what we call soft cost, some overhead, maybe once the practice is open, consulting services, certainly, marketing, reimburse themselves for some out of pocket, maybe they had to pay an attorney. Those are dollars that are not intended to be for the hard construction and equipment. So we have $700,000 left. Let's say it's about a 2,200 square foot space. That seems pretty common.
Mm-hmm.
You mentioned cost of construction. That can vary a great deal. And that's really, really a good question that some of your young orthodontists can start asking in their community, is to find a good dental specific contractor or find somebody who knows one and just ask, what is the cost per square foot
Yep.
for construction to build an office, to build an orthodontic office? And they know exactly what that number is.
Hey docs, let's talk about Smile Suite, because it's not just another scheduling system. It's a game changer in the world of new patient management. And as a proud Smile Suite partner, I've witnessed the incredible impact it has on practices of all sizes. Smile Suite means your new patient calls and web leads are expertly handled 7 days a week, even during nights and weekends. And they offer top-notch customizable presentation software and seamless post-consultation follow-up. It's like having a secret weapon for your practice's success. Curious? Dive into the revolution at GetSmileSuite.com. And don't forget to mention Hey Docs to unlock some extra goodies. Elevate your practice with Smile Suite, because every smile deserves a suite of excellence.
But if I'm to say to you that number is $200 a foot, which would be very reasonable, Jill.
Yep.
I've seen more.
If not low
Yeah.
right now.
Yeah.
Mm-hmm.
I've seen higher. But let's use that number in our example. 2,200 square feet, we're at about 450,000 construction dollar needs.
Yep. Yep. Yep.
$150,000 is left for equipment. And those three things add up to 800,000.
Yeah.
So those are three buckets I shared. Working capital, we don't want to touch it. And about, in this case, 700,000 left to build that orthodontic office.
Yep.
All in.
Yep.
And that will include contractors and equipment vendors, computer technology, IT, right? Furniture, and all those things that you need to get that up and running. And so those numbers can vary. There's things that will help subsidize these projects that we could, you talk about rabbit holes, something called a tenant improvement allowance. And that is a bucket of money that a landlord is willing to give you because you're improving their commercial real estate, essentially. Now, they'll bake that into the lease and probably get that back from you in some aspect. But it's a way for them to give money to you during the project that just simply relieves how much you need from me. And so that little math exercise I did, I like to have that conversation with people on the phone immediately. How big of an office are you looking to build? Do you know what the square foot cost is to build that in your area? And if not, let's begin working on that right now. Because that will lead us into how much money do you need? And I'm the first person that doesn't want to loan you more money than what really is necessary to make a success out of this practice. And so that's where we have to start getting some other people involved, Jill, and we might need your opinion on this. I might need to get in contact with a local realtor that you're working with.
Yep.
I want to talk to the contractor and find out, what does it really cost to get this built? There's a lot of moving pieces there, but you asked a really good question. So 700,000 to 800,000, in some cases more, is perfectly normal.
Yep. Yeah. And I think it's so interesting because I have come from, you have too, where even at the 500, boy, we were like, oh my gosh, this is nuts. And I just want to say, just like 50 is the new 40, 800 is the new 500, docs. So if you're hearing your peers out there telling you in the Facebook groups, you're nuts, you're crazy, how can you be doing a startup for 800,000? You're spending too much money. The reality of it is, primarily most of that is being driven from your construction costs. And there are just our trades right now. I always like to remind my docs that as we went through COVID, there's one industry that did not shut down and has not been hungry for a lot of years, and that's construction. In knowing that, it's even hard for us to get negotiated bids anymore, or to go through the bid process with our contractors, because a lot of times they're like, why am I even going to take the time to bid this? I've got so much work out there right now that it's not even worth my time to really try and be super competitive in this market. So thanks for shedding a light on what that loan is going to look like. I'm going to throw another curveball at you because I get asked this a lot from my docs, and I'd love to hear what your thoughts are. I'll tell you my thoughts on it as well. But I have a lot of docs that'll say, okay, Jill, all right, it gives me heartburn to take out an $800,000 loan. But, I get it. I hear it. I see it. Okay, we'll do it. But maybe I don't, if I can, I want to try and put as much of my own money into this project. And I'm curious to know maybe what your thoughts are. I'll tell you my thoughts on it. But if you would advise docs to shelter under the umbrella of the bank loan and worry about paying it off when they know they're out of the weeds, or if you would be advising docs to really only use as much as you absolutely need, and if you can not shelter under the bank loan. And I know this is a tricky question, but I get asked it a lot, and I'm just curious what your thoughts are on that.
It is a tricky question because people are free to put money into a project, right? But you better have a lot of money because we want you to have a minimum amount of liquidity to begin with. I tend to think like leverage the bank. Let's let the bank finance this, save your money. You're going to have other things that you're going to want to use that for, maybe even personally, and take advantage of this 100% financing, fee-free loan that you can accelerate payments on. Because if we use that $800,000 loan, what does that really mean? When you consider the structure of these loans, it might be 2 years of interest-only payments at $3,500 a month. You get the practice up and running and it's successful, and your principal and interest payment might be $7,500 at that point in year 3. And then you can make additional principal payments and accelerate this loan, Jill, so you don't have to pay it over a 12-year period or a 10-year period or whatever that is. And you can start crushing some of that once the practice is up and being successful. But I don't often see people inserting their own cash into these projects because they don't have to. Mm-hmm. And you don't have to spend it all. If we approve you for a certain amount of money, we certainly hope that you take some earnest approach to your budget, and maybe you come in under that, and that's what your loan actually ends up reconciling for. Mm-hmm. Mm-hmm. And so your loan approval is really a maximum amount, so to speak. It doesn't mean you have to spend it all. But I advise people to hang on to your cash if you can.
Yeah, yeah. And I think they also have to be very careful about if they are going to spending it down, and just making sure that the bank knows what you're doing with your money that's set aside to satisfy the closing, where I've seen a lot of docs that kind of get a little out of step, where they start spending down that earmarked money that has to be sitting there for the loan to close, and then they get themselves into some issues. So that's great. Yep. And that's the exact same advice I give doctors too. I use the phrase, use other people's money. Yes, it's your loan, but it's under the umbrella of the bank. And you just never know. Like you said, cash is king, and we never know when we're going to need that cash. You're never going to know when there could be another opportunity, another investment opportunity that comes available that you may not have access to if you don't have that cash sitting there. So let's talk a little bit about startups or doctors who are wanting to buy a building or buying land when they're getting started, because I'm seeing more and more doctors that are leaning in this direction. And I actually encourage it, especially because of how high our rent rates are right now. We talk about how high construction is right now. You and I both know even those parameters that we used to have in place with this is the ceiling for where we want your rent at has even changed, because gone are the days where you're going to get into a practice, or very unlikely, for $20 a square foot in rent with a $3 or a $5 triple net, we're easily looking at $40 a square foot with $7 to $8 in triple net, depending upon, of course, where we're at. So I'm curious if you can talk to what that looks like when a startup is looking at buying a building or buying land versus maybe going down the lease route.
Absolutely. And you're right, it has changed a little bit. But let's look at it from the bank's perspective first. Startups are first time practice owners.
Mm-hmm.
And so banks historically have not supported conventional real estate loans with a startup. And again, common sense would tell you it brings more risk.
Sure.
And so if a practice fails in a lease, it's probably a little bit easier to untangle that for all parties than it is if we have a building loan tied up against that practice as well. We are practice finance people. The practice is always the earth, real estate's the moon. We love commercial real estate lending, and we do a lot of that for our private practice owners because, to your point, a lot of people recognize the value in owning their own commercial real estate because in a startup loans underwriting, we have to use kind of a placeholder for rent as we approve these loans because we may not know where that doctor is going to finally locate. So we put a number in there. And you're right, Jill. We're seeing rent in some communities that's $9,000, $10,000 a month. And if I'd say to you that the mortgage on $1 million building is less than that, then buying commercial real estate financially sometimes makes a lot of sense.
Mm-hmm.
So it's not prohibitive. A lot of people come to me thinking that it is. Oh, you would never loan me money for a building on a startup because it's now I'm at $2 million. It's not the size of it. You're going to be paying rent or you're going to be paying a mortgage. And if we can secure it with real estate and have that collateral ourselves, why wouldn't the bank be supportive of that if your practice is a success? But it's not very common. And I don't always support it for a startup, frankly, because you better be sure you're in the right location, right? That's one question. A lot of startups don't know that yet. And so that's a nice opportunity of having a lease with the ability to maybe not renew long term, have the ability to get out, maybe relocate, or maybe then buy a building in a couple of years once the practice is a little healthier. Yeah. That's generally the path I support, Jill. Try to be their advisor, and I like doing real estate loans. But I think for a startup, it really has to be the right situation. I think you have to know it's the right location. You have to have a very strong borrower with a lot of cash. Commercial real estate absolutely is an option for a startup. It's just not that common. It may require some cash for a down payment, whether it's a portion of the conventional commercial real estate loan. We also have startups that do ground up projects. If you can believe that, to the tune of $3 or $4 million by the time you're done. And that's possible through maybe an SBA opportunity if conventional lending can't support that cash flow. So it's not uncommon for dentists or physicians or veterinarians with a little bit of money down to do some of these larger projects like with real estate or ground up. I don't always recommend it. We have to really make sure that it's the right person and the right situation. But reasonably sized buildings, Jill. I have another situation where, unfortunately, there was a doctor that passed away and left a small condo that's fully equipped and plumbed. No patient base. It has since dwindled. But the borrower has the opportunity to buy the condominium for $500,000, and then they only needed like another 150 for some working capital and some paint. And that's a real smart opportunity to approve a building and a practice. So everybody's situation is different. But again, I just want to make sure they know that it's absolutely possible. You just have to be very clear about what the opportunity is.
Yeah. And what great advice. And I think that planning on the forefront of it and asking the questions and making sure that you're clear in your direction is the first start there, because it may or may not be the right opportunity. But I cannot agree with you more that just saying, oh, I want to be a building owner and I want to own a practice. There's a lot that goes into that. And I love that you said demographics. It starts with making sure that for sure that your practice is going to be successful in the area that you're picking. And when I'm working with doctors, we spend a lot of time looking at that baseline information, because the last thing we want to do is spend $800,000 on just the build out of our practice and then know, gosh, I've got less than a 1,500 patient base opportunity and less than 40% of the people in my area own, and our median income is less than 60,000. That's going to be a tough market compared to much better demographics. Knowing all of those things can make a big difference in that. So thanks for, I know that's a little bit of a out of the box question in regard to, we haven't seen that as much, I don't think, in the last 5 years, but I'm seeing it more and more, and I'm having more and more doctors ask about it. And I just really think it has to do with the fact that when they're plotting out the numbers on what a 10-year lease looks like and what they're paying, a lot of times they're going, if I happen to be that person, and that was something I had always been looking at, is it worth me at least asking the question now? Maybe it makes sense, maybe it doesn't, but I think getting in front of the right advisors can help you make those decisions. And I say it's always worth asking. It's always worth talking about. Rather you close the door than have the door closed on you.
Absolutely. And for acquisitions too, Jill, it's very common for buildings to be sold right along with the practice. We're happy to do that. Or another strategy is maybe you have a borrower buys the practice with first right of refusal to purchase that building in the future. And I think your listeners need to remember that often these loans for the real estate and the practice they're separate, they're independent, they're tied to different entities. And so as a clinician, you can sell your practice and you can still own the real estate.
Yes.
And so there's a lot of flexibility with how you can structure these things depending, again, on what your vision is. And so those are the conversations we have, really. The important conversations aren't about the loan. It's really about what do you want long term? Because some of the decisions, and that's probably one of the other really good takeaways here, is a mistake that doctors make, is they choose a lender based on some criteria that does not include what their future goals are.
Yes.
And what I mean by that is you may have a borrower that fully intends to own 3 practices, but they failed to choose a bank in the beginning that had that same ambition. And so I get a lot of phone calls from doctors that say, gosh, I'd love to buy a second practice, but the bank I'm with doesn't want to do it. And so I would challenge your listeners to ask those questions about, like, how do you guys feel about real estate? Or how do you feel about multiple locations? Because a lot of today's practitioners are like that, Jill. They want multiple practices. It's a little bit different than the way it was a long time ago, but we like that too. And so you have to make sure that you're asking those questions with whatever lender you're interviewing now is, do you fit who I'm going to be in the future? Yeah. Can you lend to me with my future needs?
Yeah, that's great. So let's talk a little bit about just the team. When we're looking at moving through this process, and let's say somebody's given you a call, Steve, and they've had this great conversation with you and they're saying, okay, I think I'm going to move forward with Provide. They're going to be my lender going forward. What does it look like? Who's involved from the initial call to the closing of the loan? Because I think sometimes we think I talked to Steve, so Steve therefore is the one who's approving me and he was great and this is all said and done. But I'm curious if you can just peel back the layers of, what does the banking team look like? What are the different divisions that we're going to be working with?
You mean it's not just me coming out with my tool, belt?
I would love it if
I can put up drywall. I can put up drywall. I can install dental chairs. I do the whole thing. I put on the tooth costume. I'm dancing out on the street, the open house.
Yeah, I wish that I could do that too. Wink.
Yeah, we can't be all things. Nope. And so my role here is really to be the tip of the spear, right? I'm the first person that your doctors are going to talk to. I'm the one that's going to be here in the beginning. I'm going to be here in the very end. And so it begins and ends with me. And you know that. But I have a team, and it's not just me. And I like to tell doctors at the end of the project, I'm going to look at the software we use called Slack. A lot of people know that. We build a project around each doctor, and different people that Provide become attached to that project based on their skills and what their role is here. And at the end of a project, there could be 35 people from Provide that are attached to this, that know that doctor, that are working with that doctor. And so it begins with me, and then it moves into a closing coordinator who helps them get it open. Then a project manager who helps work with the contractors and paying the bills. They may have an insurance expert that helps them along the way. They're going to have an underwriter that's making sure the math works throughout the project.
Mm-hmm.
We have enough money there and everybody's doing okay. They're going to have a personal healthcare banker that they have a cell phone for that's going to help set up credit card processing and the Provide credit card and all those banking systems that we remind people we don't go away. Fifth Third Bank wants to be your partner in business banking for years to come. So that's a new partner that you're going to have. And so even at Provide, I may have a dozen people on my team that are going to work with you throughout this project. And that doesn't include the people that are on site in your project in the field. Yeah. And so dozens and dozens of people will be involved in this. So picking your right team is pretty key.
Yeah. Yeah, that's great. And I think, again, it's just nice to hear that, because I think we know that there are other people, but I think a lot of times we think there's just one or two people. And it's nice for you to open that up for us and be like, okay, there's somebody dedicated to just paying those invoices that you approve. And there's somebody that's, just dedicated to making sure that, like you said, the money is being managed. I always tell my docs, there are a lot of people that want to spend your money. They hear doctor and they think like money's no object to you. And really, we all know if we're working within our budget, that 800,000 seems like a lot. It's not a lot. Every single penny counts. And we want to make sure that we're being really smart as we're working through it. So as we're finishing up here, I'm wondering if you have any final pieces of advice or loan wisdom that you want to drop on us.
Yeah, I said it before, and it's don't do it alone. It's a challenge for me. When I have doctors come to me, I can offer a lot of advice. I've worn different hats, but at the end of the day, I'm probably not the best advisor. I'm not the best at all of these areas of expertise. And so I will often encourage my doctors to start to build a team. And it depends on their situation, but it might include somebody like you. It will include very dental or orthodontic specific vendors, be it realtors or contractors or insurance people or that equipment people. That list goes on and on. And I think that's probably the most important thing for me, is that they understand they need to trust.
Yes.
I think that's hard sometimes. You have to find people that are really good at what they do and let them do what they do and make them talk to each other too. That's really important. And so that's the biggest piece of advice I can give anybody as they approach getting a loan. Getting a loan's not that hard. That process itself is pretty quick. They've worked very hard to become an orthodontist. We recognize already what that brings to the table. And so it's everything that happens after, I think. And if you ask doctors what they thought was really important when they began to get the loan, interest rate, and then what they thought was really important at the end of a project, they would tell you different things. And they would tell you about people at that bank or their advisors or people on their team that help them through challenges that has made them become friends now. And that's what you hear at the end of these projects. Or I had no idea what went into this. And so that project management team, I'm super proud of ours at Provide. Like, that's a really important question too. Who's going to be with me through this? And what does that look like? Who's your team? So it's not just me.
Yeah. Yeah. Great advice for sure. If somebody wants to get a hold of you, what's the best way they can get a hold of you? Reach out to Provide?
Yeah. 720-550-2567. Call my cell phone, steve.steinbrunner@getprovide.com.
Perfect.
You can find me on the Provide website or on the Hey Docs videos.
Yep. For sure. Steve, it's always a pleasure. You are definitely my go-to guy when I've got banking questions. I've got something that comes up. And I always appreciate it too, just on a personal note, when I've got a doc that's working with you. And if we ever have things come up, I know just like you give out your cell phone to everybody here, I know you are a text away and will get right back to me to help solve a problem. So thanks for what you're doing in our industry.
You're welcome.
So as we finish up, if you remember from before, I like to finish up with a little speed round. I've got new questions for you. Are you ready?
I thought they were going to be the same ones. I practiced the old ones.
Oh no, of course not. We're gonna change it up. Bring it on. Okay. What's your go-to productivity tool?
Go-to productivity tool. This isn't that exciting, but it's good old fashioned Excel spreadsheets. I'm a banker kind of guy, and I live in Excel spreadsheets, working on budgets for doctors that are looking to do projects. Like, without that, I'm in trouble.
Yep, I can appreciate that. Are you an early bird or a night owl?
Oh, early.
Perfect.
And the older I get, the earlier it is.
Yep.
I'm productive in the morning, and I'm lucky that I work with people across the country. And so there may be some East Coast Provide team members or customers that are 2 hours later than me in the morning. I can get to work.
Yep.
And yeah, mornings are good. And likewise, when you try and find me at night, you probably won't have much luck.
Yep. Too bad, West Coasters. I'm on a bike trail. What was your first job?
My first job?
Mm-hmm.
I had a lawn mowing business.
Oh.
I was a little kid that was pulling a lawnmower behind me during the summer, and I had a wad of cash and would mow lawns and advertise for it, and had my own little business when I was little. Absolutely.
That is great. All right. What would you say has had the most impact on your professional life?
Oh, professionally, I've been in the dental industry for 30 years. I've worn a lot of different hats. I've had different roles in this industry, but none of it would have happened if I passed up that interview with a dental supply company in 1993 when I was in college.
Isn't that cool?
First and only interview I really did, and ended up selling dental supplies, and the rest is history.
I love that. All right. And to finish us up, one business skill you think everyone should have?
How to ask really good questions.
Yep. That's a good one.
I think that's underrated. And I think anytime we're dealing with, whether it's a patient or I'm dealing with a doctor or really anybody, I think slowing down and really thinking about what's important to them and can I ask the right questions and try to figure out how to help.
Yeah, I cannot agree more. That's great. Again, Steve, thank you so much for being on the show, and enjoy your summer. And until next time.
Absolutely. I look forward to the next one. Thanks, Joe.
Yep. Thank you. See ya.